Hello everyone, welcome back to our channel and welcome back to this particular video. This particular video is going to be dedicated to private credit, and when we are talking about private credit, the news that we wanted to share with you was how JP Morgan is dedicating almost 50 billion to private credit. So let's do a deep dive. Let's try and understand why this decision has been taken and what are the repercussions for the market at large. JPMorgan Chase is expanding its private credit offerings with 50 billion commitment. Now, in a significant move within the financial sector, JPMorgan Chase has announced a substantial commitment to the private credit market, earmarking almost 50 billion of its own capital for direct lending initiatives. This strategic decision positions the bank as a major player in the private credit sector, which has gained momentum as various financial groups increasingly bypass traditional debt markets. Let's talk about the key details of this initiative. First and foremost, capital allocation. JP Morgan Chase has committed 50 billion of its capital for direct lending to companies that are typically backed by private equity firms. This commitment is supplemented by an additional 15 billion from other investors, aiming to provide robust financial support directly to the businesses. Second, the market shift. This initiative comes at a time when traditional lenders are diversifying their offerings in the private credit space, a market that has expanded to nearly $2 trillion. The growth is largely attributed to the 2008 financial regulations that discourage banks from maintaining high-risk loans on their balance sheets. Thirdly, the strategic partnerships. Unlike its competitors who have formed alliances with private credit funds such as Citigroup's collaboration with Apollo Group Management and Wells Fargo venture with Centerbridge, JP Morgan aims to leverage its existing relationships and trust within its corporate clients. Next, let's focus on the strategic implications and the goals. First and foremost, the community and the client benefits. Now, CEO Jamie Morgan has highlighted that this move offers JP Morgan's clients more flexibility and options, enhancing the bank's role in communities and maintaining its reliability across all market conditions. Second is the long-term financing. Jamie Dimon has also previously noted that the advantages of private credit, such as providing long-term financing solutions compared to traditional methods like syndicated bonds and loans. And lastly, when we're talking about strategic implications and goals, let's talk about the management partnerships. JP Morgan is currently collaborating with several asset managers on this project, including well-known names like Cliffwater and Soros Fund Management. The bank plans to expand these partnerships to increase its lending capacity. Given this, let's do a reflection on the past decisions. The decision to utilize its own balance sheet for private credit lending also reflects on strategic pivot from JP Morgan's previous sale of HPS Investment Management in 2016. Following increased regulatory scrutiny, the bank sold its then major private credit player, which has since grown significantly, highlighting a missed opportunity for JP Morgan. Next, let's look at the market dynamics and the future outlook. When we're talking about the market competition, private credit has become a critical financing method for the buyout groups, especially during the market downturns like those seen in 2022, allowing these groups to continue their acquisition despite tightened credit conditions. And secondly, the banking sector response. In response to these market dynamics, banks including JP Morgan are increasingly motivated to provide their own financing solutions to compete with dedicated private credit funds. Now, this strategic shift by JP Morgan Chase not only underscores the evolving landscape of financial services, but it also sets the stage for the bank to become a pivotal player in shaping the future of private credit lending. As the market conditions fluctuate, JP Morgan's approach may serve as a bellwether for other institutions also evaluating similar expansions in their financial offerings. Now, this is what we wanted to share with you in terms of private credit, in terms of JP Morgan's commitment to private credit, and the amount that it has committed for the private credit in the next years. So hope you've enjoyed this video. Do stay tuned in for more. Thank you.